Welcome back to my channel. Today we're diving into a topic that can feel a little daunting for small business owners, freelancers, and anyone with income that isn't subject to regular withholding. My name is Shakira, and if you're new here, we're all about helping you navigate the financial side of running your small business. In this video, we'll break down what estimated taxes are, who needs to pay them, how to figure out how much to pay, when those payments are due, and the best way to pay them to stay on the IRS's good side and avoid those pesky penalties. Let's get started. So what are estimated taxes? These are essentially tax payments that you make 4 times a year. They're necessary for individuals or businesses that expect to owe $1,000 or more in taxes when they file their annual tax return. W-2 workers get taxed withheld from their paychecks, but if you own your own business, you have to make estimated tax payments yourself to the IRS. The IRS does not like to wait to get their money, so you have to pay it quarterly. For individuals that have passed through businesses like an S Corp or a partnership, who exactly needs to worry about paying these estimated taxes anyways? Generally, if your income isn't subject to regular withholdings, this might apply to you, right? If you're a self-employed person, like a freelancer, you're an independent contractor, or a small business owner. Also, landlords and investors who earn income from rental properties, interest, dividends, or even capital gains, they might need to make these quarterly payments. Similarly, if you receive other non-wage income like taxable alimony or unemployment compensation or even other Social Security benefits, you might be required to pay estimated taxes. Even S corporations and partnership owners need to make estimated tax payments on their profits of their business if you're going to owe more than $1,000 for your business. So when we talk about a small business or you have a Schedule C business and your spouse works, you need to consider your spouse's W-2 income when you're estimating so that you pay the correct amount. You might need to pay estimated quarterly taxes on them, okay? All right, why pay quarterly taxes? The key reason is to avoid penalties. The IRS can and will charge a maximum of 25% penalties plus daily compounded interest if you don't pay enough of your tax liability throughout the year. Even if you ultimately pay the full amount when you file your annual tax return, at the time of this recording, the interest rate is 8%. So let's say you didn't pay first quarter, second quarter, third quarter, you only paid fourth quarter, they're still going to calculate the amount that you were late on for not paying it first, second, or third quarter, okay? Think of it this way. The IRS does not like waiting for their money. And that penalty with compounded interest is very dangerous, okay? So here's an example of a taxpayer that owes $29,000 for the year, for the tax year. Starting from the due date of April 15, 2024. That was for their 2023 taxes. And as of the time of the recording, they have not yet paid they haven't filed. So the total failure to pay penalty would be, as of today, 3/15/2025, would be $1,691.47. That is that 25% I was talking about. It's calculated at 5% monthly. The accumulated interest is more than even the penalty. The accumulated interest will be $2,254. That combined penalty and interest is $3,945. Added to the original balance of $29,000, their new balance after 11 months only is $32,945. This penalties and interest add up very fast. You don't want to play with it, okay? So now, how do we estimate the taxes? So the general rule for the IRS is the smaller of 90% of the tax for the current year or 100% of the tax shown on the return for the prior year. There are special rules though that applies to farmers, fishermen, and people with high income, certain high income earners, right? For example, if your income is more than $150,000, it becomes 110%, not 100% of the prior year tax return. So you still check the lower of the smaller of the 90% of your current year taxes, or If you're a high income earner, 110% on your prior year tax return. Okay? All right. There are two websites you could go to, right? The first website is theatlanticunionbank.com. I will put the link at the bottom. And this is what it looks like, right? Basically, you have to fill in what your filing status is, your wages, your income, and all those other sources. And it's very good and very detailed. It also has a section for other taxable income. And you put all your business income in there, if it's a S Corp, if it's a C Corp, all that good stuff. It's very detailed. So every time your income situation changes as a business owner or something changes, go to this tool and put it in. It will estimate how much you need to be putting in quarterly, okay? Another one is Smart Asset. Smart Asset also is very good. It's not detailed like the Atlantic Union Bank, okay? Hi, did I tell you we have a free tax and accounting proficiency school community? Yes, we do. It's basically where we help small business owners just like you. Our mandate is to help small business owners to be able to focus more on what it is they do best, which is growing their business. But they know they have these tax and accounting compliance requirements that they need to meet. Our mandate is to make sure that no small business is left behind when it comes to staying compliant with your business. We help you answer questions monthly in our monthly calls, and we have a community in the school where people ask questions, and you have like-minded business owners just like you. So I look forward to seeing you there. Let's get back to the video. So it is important to know when the due dates are. It's absolutely essential to mark your calendar with the quarterly estimated tax due dates. Here are the general schedules, right? This is the general schedule. The first quarter, covering income earned from January 1st through March 31st, is due on April 15th. The second quarter, covering from April 1st income to March 31st income, is due on June 15th. The third quarter, which covers income from June 1st to August 31st, is due on September 15th. And the fourth quarter, for income earned from September 1st to December 31st, is due January 15th of the following year, okay? Keep in mind that if a due date falls on a weekend or a holiday, the payment deadline is shifted to the next business day. So now we're going to be discussing how to pay quarterly estimated taxes. Fortunately, the IRS offers several convenient ways to pay your quarterly estimated taxes. One of the most popular ones is through the online portal, which is irs.gov. You need to navigate over to where it says payments. You can use their IRS Direct Pay, which allows you to pay directly from your checking or your savings account without needing to create an account. You don't need to create an account. You only need to know what your social security number is and what your filing status for last year was, right? Another online system is the Electronic Federal Tax Payment System. It's the EFTPS. This requires a one-time enrollment, but it's a reliable way to make payments and even set up a scheduled withdrawal that IRS withdraws it every quarter for you. You can also pay with a debit card or credit card through a third-party payment processor that the IRS has authorized. They have it listed on their website. However, be aware that these credit card or debit card processors, they may charge a small convenience fee, okay? If you prefer, you can just also pay by mail by using a check or a money order. You need to include a Form 1040-ES payment voucher along with your payment if you are going to be using a check or money order. You can download that from the IRS's website. It's called a 1040-ES voucher. All right? Okay, so let's talk about a few tips for managing estimated taxes. The most important question to ask yourself is, are you a full-time business owner, or are you a W-2 earner with a side hustle? Or is business still just a part-time thing for you? You need to add the business income. If it's a side hustle that you're still doing, your business income needs to be added to your W-2 wages, and then you'll be able to truly see your full income amount. That way you could have one income amount that you put into that tool, the Atlantic Union Bank or the Smart Asset tool. And that way you could truly know how much you owe in taxes And if it's going to be more than $1,000, you break that into 4 and then you make those quarterly taxes that way. A simple strategy for catching up with that payment is to save a certain percentage of every payment you receive, right? Consider using a separate bank account specifically for tax savings. A lot of people get carried away, and there are even people online saying, no, put it in an investment account, let it grow. What if you put it in an investment account and all the stock crashes? Everybody has a different risk palette tolerance, but when it comes to taxes, the way these penalties and interest stack up, that's not to be left a chance. If you have taxes left over at the end of the year, money in your tax savings account that you're not going to be paying to taxes, you could use that balance to go into the stock market. But it's not worth you taking the risk and finding yourself short at the end of the year. So I would say have a separate tax savings account, setting it up regularly so it transfers into there, and that's the account that you connect with the IRS for them to pull it out quarterly. The aim is to pay your estimated taxes consistently throughout the year, aligning with the quarterly due dates that I showed you earlier. It's a good idea to review and adjust your income and your expenses regularly. So every quarter, let's say you've done the first quarter and second quarter, and you know that your income has really increased or decreased, go back to that tool and rework it and see what the numbers are. If your income has significantly changed, update your estimated tax payments accordingly. These things change in business, so you have to review it as changes come about in the income earned, okay? While it might seem like an extra step, paying your quarterly estimated taxes is a really crucial part of being self-employed or having income that isn't subject to regular withholdings like your W-2. It's very important that you have a plan for this so you're not caught unawares and surprised and you're owing so much at the end of the year. It's the best way to avoid those unwelcome penalties and interests that compound daily, okay? Please remember that the information I've shared in this video is intended for general guidance only. It's not specific tax advice to your scenario. It is best to book a consultation with me or any tax professional that you know so that they can look at your scenario for your specific circumstance. All right. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more tips and information. If you have any questions about estimated taxes, feel free to leave them in the comments below. Thanks for watching.